Hey traders, checking in on the stock market today. Things getting very tight and a little bit of profit taking into the end of the day. You can feel the market just tensing up. CPI numbers come out tomorrow and some really tight ranges are likely to break. I certainly expect more volatility tomorrow than we saw today. Let's look at the key levels that the bears will have to break if they're going to prove anything to us. So looking at the S&P 500 futures chart, we are right here on an uptrending support line. This is a rising wedge pattern. And we do have a double top at the all-time high. SPY has broken the all-time high. Futures charts have not. So important to keep an eye on. And we can see the low, pretty much the low of the last few days, 42.07. So if the bears are going to prove a bear break of this pattern, not only do we need to fall below this uptrending support line, but we would have to break 42.07 as well. And then from there, we would zoom out and scout weekly consolidation to potentially be underway. So what does that look like on SPY? So here's SPY again. It did hit an all-time high, but the futures chart did not. And if SPY were to break 416.18, the daily uptrend would be lost. And you can see the pattern with SPY really 3, 6, 7 of the last 9 days, we've closed lower than we've opened. If you show me this chart on its own, I say this looks like, distribution with selling going on, and it's not enough to roll things over, but bulls are not proving anything over the last 2 weeks. That being said, we know under the hood, there's a lot of rotation going on between all of our sectors, into growth names, out of growth names, back and forth, and that's what is leading to the market trading fairly sideways, in my opinion. But the end of the day today, you could tell the market was just tensing up. It just felt like clenching your muscles, anticipating a hit, heading into the CPI numbers tomorrow. So I have no idea the reaction we're going to get from economic data tomorrow morning, but I can anticipate that with ranges being so tight and SPY pretty much being flat 4 days in a row, that we're going to open up the range and we're going to see more volume likely tomorrow. So first support level, 420.32. The most important level for me, 416.28. And if the bulls are going to get a convincing break, we need a new all-time high and follow through. Either reaction, direction is possible. I personally am a little bit more cautious. This is the kind of setup where if you have a bullish portfolio, you absolutely need to be hedging right now. And if we get a bull break, you exit your hedge and your portfolio is green. If we get a bear break, you protect some of your portfolio because, again, it's just showing bulls getting a bit tired up at the highs. QQQ. So QQQ daily inside bar, and the sell-off was more significant in QQQ than most sectors. And you can see it was an hourly equilibrium, and it took 2 days to tighten up. High and low of yesterday. Nice top fishing play first thing this morning. Bears were watching, anticipating that an hourly lower high was the most likely scenario. And then we held the low, lower high, and a bear break right into the end of the day. So that's either going to be negated on a bullish reaction to pre-market data tomorrow, or it's going to get follow through. And if we see follow through and the inside bar breaks bear, the most important level is 328.28. So the bulls have a good amount of space to work with. We can pull back over 2% and still be in a daily uptrend. You can see the volume just getting really, really low. One of the lowest volume days, if not the lowest volume day in QQQ in 6 months. Again, everybody's just waiting for tomorrow. IWM, little double top with the high yesterday. We broke it, but only by 16 cents. Pulling back hourly, confirmed a little downtrend here with a weak bounce into a lower high and then lower low. So if the low of today breaks tomorrow, daily consolidation underway. And again, another name that has a lot of space. Anything above 224.04 is a daily higher low. So IWM bulls are not as concerned about losing their daily uptrend as, say, SPY bulls may be. As SPY has about 1.2, 1.3% before we would lose the daily higher low. Financial sector. So I do still have some FAZ position on. The way that I'm positioned in my portfolio, I've been lightening up bull positions over the last week. Exited half of my metals last week. Exited half of ARC. Not sure if I said that in the video yesterday, but I did exit half of my swing ARC position. We'll go over that now. And it was just seeing the daily resistance rejection. I gave the bulls a chance to break 115.14 yesterday. They didn't do it, and the size of the rejection, had me scouting an hourly lower high as the most likely scenario. And we then double topped at that level again today. But I exited half at the end of the day yesterday, anticipating an hourly lower high. And again, just locking in some profit and not wanting to have to constantly be protecting positions. I like being a day trader and like not worrying about the market, what it's doing after hours. So I do still have some metals, I do still have some ARC, but I'm lightening up my long exposure, which means I need less hedge short exposure to protect things. So XLF, I do still have half of my FAZ position. Daily next level is down at 37.22, and weekly consolidation is underway here. Last weekly higher low is 34.42. There's a ton of space for that level to hold. We haven't even tested the weekly EMA 12 in the last 4 months. So if we were to lose that level, it would be notable. But if we hold weekly EMA 12, it's still very healthy weekly consolidation. And we look at the daily time frame, bears aren't really showing us anything with volume. We can see they showed us something back in May. Didn't get a whole lot of follow through, but we would need that increasing bear volume for this to be anything more than healthy weekly consolidation. Healthcare did a good job of holding up the broader market a good bit today. XLF was down maybe 0.8, 0.9%. XLV was up 0.8, 0.9%, and QQQ was flat. So SPY was pretty flat overall as well. If XLV breaks daily resistance of 123.61, it's a little higher low and higher high. And that is a weekly higher low forming, and it's a weekly bull flag. So if the daily trend change is confirmed, the odds of a weekly bull flag increase a good bit. And again, it's just another chart where the weekly time frame, there are no concerns whatsoever for the bulls on this chart. Pretty much all of our major sectors and all of our major charts, there's a lack of concern from the bulls. And it has to be the bears showing up with a lot of volume and sucker punching the complacent bulls if anything's going to change here. And in the absence of that, bulls hold on just fine. XLV, we just did it. XBI, follow through. So this bull move keeps going. It keeps creating more and more space on the weekly time frame for an eventual trend change attempt. And here we are now looking at the high of May, trying to break 138.20 for the monthly higher low to be set, and for us to then be scouting a monthly lower high to be the result of that bounce. Daily time frame. Let's actually go to the hourly. So we did lose an hourly support after a double top. Double top at the high of the day. Bear break into the close. And if the low today breaks tomorrow, 133.68, daily consolidation will be underway. But it's just another sector that has a ton of space to work with. Anything above 125.08 is a daily higher low. TAN. TAN is weaker in the growth sector. And if we drop down from here and drop to another lower low, this weekly chart is going to remain weak. What we have to see now is bulls hold 67.69 and break 80.80 or make that 80.97 to confirm a weekly trend change. So some growth names like XBI and ARC and NIO, they have not started weekly consolidation. The solar sector has. So it's not positioned well. If there were any fear in the broader market, we are not positioned well for a monthly higher low to shape up. We have to see an absence of broader market fear and the bulls set a weekly higher low and regain momentum in their favor. SMH, daily time frame, inside bar. Again, it's all about 244.80 because if that level breaks, we confirm a daily downtrend. And a daily downtrend being confirmed here is a weekly lower high being set to remain in an equilibrium. So you think about it from a bear's perspective, it's a clear top fishing play. And there's limited risk if stopping out. And if we do see that bear break, we'll then look for a weekly higher low to try and form compared to 222.82. And that is 10% to the downside. So weekly equilibrium on watch, but bears have to take out that daily support level of 244.80. And NVDA started daily consolidation. No, it didn't. Almost started daily consolidation. We held support by 21 cents. inside bar, inside bar. And if we get the bear break, daily consolidation will be underway. MSOS, sideways, range bound, nothing going on in USMJ. It's traded on the OTC. There is low volume, interest is waning, and the Canadian MJ tickers, it's the kind of thing where it's frustrating a lot of USMJ bulls for those not following the fundamentals, because the USMJ sectors, as far as balance sheet and fundamentals are concerned, are much better companies than Canadian MJ companies. But they can't uplist. They're traded on the OTC. The Canadian names, without operations breaking federal law in the US, they're allowed to uplist. So you look at a name like TLRY, and this is where the traders go, and myself included. I traded TLRY 20 times today. And the volume is here. We traded almost $2 billion in volume today. And if you add up all the dollar volume in all the USMJ names, Tilray is still trading. One company is still trading probably 50 to 80 times more dollar volume than every USMJ company combined. So it's just not a level playing field, and traders are going to go where the liquidity is. You know, if I can market buy and market sell 6 figures with slippage of a penny or two on TLRY, if you try to do that on the OTC names, you can't. And you're going to run the price up. It's a completely different world, and it has very little to do with the actual companies and everything to do with where they are listed and who they give exposure to for trading. You know, hedge funds, automated trading, and bots and algos that are correlated to the S&P 500. So it's a completely different world. The bottom line is there are a lot of traders right now and investors that are beating their heads against the wall, frustrated at what's going on. But we have to just accept that it is what it is and go where the opportunity is. It will be time for USMJ at some point. It will require uplisting. And I will be all over it when that happens. But I'm not going to be putting any kind of significant capital or time into it as long as low volume OTC trading continues. The VIX getting a little bounce going. So again, whenever you confirm a bull flag or a bear flag with no follow through, pay attention to the other direction. And if you've been watching these market videos, you know natural gas did it in a big way on the weekly time frame, and that marked a massive shift in momentum. Weekly bear flag confirmed, straight into a 30% move almost. So the VIX did that. And if we see bears take over tomorrow in reaction to economic data, we can look for a break of 1927, and then we would zoom out and scout a weekly lower high. But it is a notable confirmed daily bear flag with a lack of follow through. Let's see if the bulls can break the daily lower high resistance of 1927. Dollar trying to bounce, 4-hour trend change needed. So nice bounce off the low, absolutely, but we must set a higher low and higher high for a daily higher low to be set. If we confirm a 4-hour trend change, daily higher low is 89.83, and we're then looking back up at the high of 90.63. We know the bulls must break 90.63 if they are going to negate a weekly bear flag. If we do not break 90.63, the dollar is a weekly bear flag. The metals are still holding on. Inside bar on gold. If the inside bar breaks bear, and they're going to react to the data tomorrow morning as well, if the inside bar breaks bear, daily lower high is set, and it's all about 1856 support to see if we confirm a daily downtrend or not. Silver had a much better day than gold, but it did double top, reject from resistance, and we have a little triple bottom down here around 2750. So same thing, if we bear break, daily lower high is set, and then it's a possibility of confirming a daily downtrend. And the miners continue to show us weakness. We closed at the low on GDX. It confirmed another daily lower high and lower low, while the metals are not close to doing so. So we'll see if this minor move is going to be a precursor to metals following, but we are at the low of consolidation on GDX, looking for a weekly higher low, but no sign of it right now. Oil, still a 4-hour uptrend. Bull breaks lacking follow through, but bears are not proving anything to us. This is a nice uptrending resistance line to be keeping an eye on. This is a nice uptrending resistance line to be keeping an eye on. And if we lose the 4-hour higher lows, we look back at our little daily level of 68.47 that recently formed just yesterday. But clear resistance, continuing to keep the price fairly contained on every bull break we see. And natural gas daily in sidebar. So 4-hour uptrend remaining intact. Bulls need to hold 3063 for that to remain the case. If we fail 315 and break that support, confirm a daily downtrend. Actually, it would confirm a 4-hour downtrend, and it would confirm daily consolidation. But again, with this bull break, bulls definitely want follow through to try and make it back to 3315. So I did get my flow back after losing it yesterday. No groggy morning this morning. And I traded TLRY a lot. And I traded this morning. What stood out this morning? Volume increasing second 5-minute candle of the day. If you entered at the high of that candle, the opportunity was still 6 to 7% up to the high of the day. So again, it is a helpful signal often. So the first trade that I took was this 5-minute higher low. I was live streaming at the time. It's always more difficult to trade when you're live streaming, but made an entry, I believe, in the 2120s, and I sold anticipating a 5-minute lower high. Why did I anticipate a 5-minute lower high? Because the size of the pullback, 2210 all the way down to 2116. That is essentially a 4% pullback. So for me, the most likely scenario is a lower high. If the less likely scenario takes place and we get bullish continuation and I'm wrong, what happens? I leave money on the table. So again, my style of trading, if I'm wrong, I want to leave money on the table. I don't want to lose money. So I just started scaling out as I would any normal little day trade. So got filled and exited maybe some of the 2140s, some of the 2160s. Either way, it gave me a half a day maker in less than 3 minutes. And that's how I started my day off. And again, zero regrets whatsoever for doing that. Because if I hold and hope that we see continuation from there and we don't get it, then I end up break even. So I will continue. And the thing about, when you're confident as a day trader, the amount of half a day maker to day maker opportunities, I know there's a dozen more. If I make that trade in the first 30 minutes of trading, I know I'm going to have 10 more opportunities throughout the day to just keep adding on those base hits. So the next trade that I took from there was, don't remember the next one. Again, there was at least 10 of them, but I did take another one here. So this waterfall, the 2-minute time frame coming from the high of the day, and at that point the bulls have clearly established themselves and said it's a big volume bull day. And at that point, we had a 2-minute waterfall drop from the high of the day. So we went from 2290 to 2226 in 8 minutes, just a straight waterfall drop. What's the most likely scenario coming from the high of the day? It's a 5-minute higher low. So what I did is I entered at EMA support, and again I flipped it real quick. And looking at it on the 2-minute time frame, waterfall drop, and I sold into this bounce, the exact same style of what I did in the morning. This time it was the right play, where I locked in another, probably a half day maker size trade, and then if I had not done so, I would have stopped out break even or at a small loss. So that's just an example of why I trade with that style, because this was the most likely scenario as far as likely setting a 2-minute lower high. From there, I was looking for a 15-minute higher low. Next trade. And we dropped down and hit 15-minute EMA 12. So again, the EMAs are my visual guide, and I sold half on that bounce. And my intention was, okay, I'm selling half because at this point, bulls have proven a lot. I sell half. I put my stop under 21.72, risk-free. And if the bulls are going to keep control, I have a position. And if they lose the 15-minute uptrend, I stop out. We had a 15-minute equilibrium break bull. And then at the end of the day, we all out dumped. I wanted to swing this position. I was really loving the action up until 3 p.m. And that's when the switch flipped of profit taking. And it was the market dropping. And it was clearly magnifying the move to the downside in TLRY. But it was a race to the exit to a certain degree before tomorrow. So I ended up stopping out of my swing trade attempt position and giving back some profit, absolutely. And then I tried to bounce at the end of the day when I was live streaming, and it stopped out for another small loss. The lesson there is that was over trading at that point. I had a really good day. I counted all-time highs. There is no reason for me to try and take that trade, but people liked it in the chat room as far as an example, so that was good. But the trade was just looking for, again, the 2-minute waterfall, looking for an hourly high or low, anything above the low of the day. And I made an entry. I made one entry, 21.70. A second entry, 21.40s. My break even was probably 21.58. I wanted to sell half in the 21.70s, which would essentially be me looking for a 2-minute lower high. And it would be essentially swapping out my higher entry, giving it back, and keeping my lower entry. That's the way that I view it. So I wanted to sell in the 21.70s. We didn't get there. We topped out at 21.69. And then as soon as we started dropping back down, I sold half of my position. And it was me just saying, okay, we're not going to reach my target, but I still want to be protective here. One little side note. After my second position filled, my stop went under 21.30, which was my dollar risk I would allocate for the trade. Support and stop level was not based on any previous price. I should say, stop level was not based on any support or any previous price. It was based on all dollar risk to limit my downside. So exited half, just under break even. So now my break even on my half remaining position is probably 21.60s. And then once the low at that point broke, I moved my stop up because I said, okay, if we're not going to get a 2-minute bounce, then bears are proving complete control to me. And rather than just leaving it at 21.30, I forget what I did, if I moved it up or not. 12 cents on a half position isn't a huge difference for me. But either way, the second half stopped out for a small red trade. And again, it's over trading. At that point, no reason to take that trade whatsoever. You've got a good day. See you tomorrow is what it should have been. That was an over trade, especially after stopping out of my attempted swing trade position. Still in profit, but gave some profit back. But overall, 90% of my trades today were good and in flow. So getting that back. And we'll see what tomorrow brings as far as reaction pre-market. Bears have to prove it with volume. When's the last time we've seen all major sectors at the low of the day at the same time? It's been a while. If it has happened recently, it was very, very brief. And the next time we have a day where that happens, and it happens for over an hour, you'll know. Because the headlines will tell you. Fear. Inflation. End of the world. All right, I'm out of content for now. So rather than doing an old video, when I was live streaming this morning, there were a bunch of crows. There must have been a dozen crows in the yard, and they were just so annoying with their screeching. They were all huddled up on a rock right out here. But it was funny, and I went out and shoot them off. But right after that, and someone made in the chat room here, someone made a Photoshop of giving me a crow. And then the doorbell rings, after the bell rings, and I got some art from the UK. And this is from, let me make my screen bigger, Wool Images. This is from Jill Harrison, jill-harrison.webs.com. In the UK, I believe. I may be mistaken, but it was overseas. And she does wool art, and it's really cool. And it's going to be a glare here, but it's a crow or a raven. I'm going to call it a crow. And it's all just wool, a bunch of different colors overlaid, and it pops out a little bit. It's 3D. Really cool. And there's another one. As far as how much it costs to get it shipped from overseas, this is a big one. These are flowers. Again, the glare is pretty brutal, but really cool 3D. And the cost of this framed overseas, you know, if I was walking downtown and this was in the window of a gallery, it would easily be 200 to 300% more than what she charged. So if you like that, check it out. It's a really cool style. I like it a lot. Do good things. See you tomorrow. Good night.